Your view on these GDP numbers, of course, maybe taking a little bit of heat out of the rally, but still didn't really impact markets too much.
Ingrid, no, you're exactly right. It did seem like the market shrugged off those numbers somewhat, as Michael has pointed out. I think the main focus was that Aussie dollar, where we did see it falling about 64 points or so when we did get that GDP number out. But overall, it did seem like the market shrugged off those numbers, and we did maintain a lot of that momentum for most of the day, really following on from the momentum that we saw yesterday. We did see a combined loss from Friday and, of course, Monday of about 3.6%, but it looks like we have recovered now over the last 2 days about 2.6% or so. So that is certainly looking very positive. Of course, we did see a bit of a fall off in those commodities and those energy prices as well. But despite seeing that, we actually did see some strength coming out of those sectors. We also did see quite a significant turnaround in the staples sector, and that was a result of Metcash having a bit of a rebound. Of course, over the last 2 days, it was down a huge 30% or so. So investors certainly coming back in there. The healthcare sector was another strong performer, potentially off the back of that weakening Aussie dollar, and I do think that potentially had an impact, but overall a very positive day today.
Today, of course, 10 being approached with bids. It's coming out and confirmed that today. The stock down 6.25%. What do you make of it, Leanne?
Ingrid, look, certainly seeing it under pressure once again. We did see the stock falling about 5.8% yesterday as well, but closing at about 22.5 cents, and that's just below that bid that's come through at 23 cents from Foxtel and Discovery. So there were reports today, obviously, that they have cut that bid from 26 cents, which actually came through a few weeks ago, now down to 23 cents. And I think that reflects the fact that they've had a review of the company and concerned about the health of the outlook for the company, particularly in terms of those ratings. So I think the fall that we have seen today certainly reflects that, I think, some disappointment from investors as well in terms of the value of that takeover offer coming through. But of course, there is always the possibility of no bid actually being successful. So I think there still is a lot of uncertainty out there. If that is the case, obviously the company is going to be looking at recapitalising their debt or potentially taking the company private. So there still is a number of options out there. I still think there's a number of hurdles to get through, particularly in terms of passing a lot of the current media laws. So there is going to have to be, obviously, approval from the ACCC. But on top of that, it is highly dependent on the support from a lot of the major shareholders who own about 40% of the stock, being Lachlan Murdoch, James Packer, Gina Reinhart and Bruce Gordon as well. So obviously need their support. So I think at this stage it is going to be a lot about the approval coming from the board and, of course, the right price coming through for investors. So at this stage I still think it is a bit of a waiting game, but unfortunately seeing it falling off, I think, reflecting uncertainty.
Today, TPG, it's up about 2.6% right now after its AGM. What do you make of it?
It did look fairly positive today, Ingrid. There certainly weren't any surprises that came out, and I think that's why we did see that rise in the share price. Firstly, they did come through confirming their very strong FY14 results, where we did see a very solid set of numbers. We saw some solid revenue growth up about 14%, and also some solid earnings growth up about 24% or so. We also saw a lot of their underlying KPIs coming through very strongly, and of course saw a solid first-year contribution coming from AAPT, and also a lot of those cost synergies came through above expectations. So all of that really pointing to strength in the company. Since that result, the stock's been up about 11% or so, so certainly has been welcomed by the market. Secondly, they actually did reconfirm their guidance today, and of course that is always positive and encouraging for investors, certainly expecting that their earnings will come in about 25 to 26% above FY14, and also their CapEx guidance maintained at about $100 to $120 million. This is actually higher than what we have previously seen in the past, but we actually do think that this is needed in order for them to deliver some of that revenue growth. So I think overall it was positive, confirming that guidance commentary. There was quite not so much commentary in terms of the outlook, just to say that their results year to date are tracking well. So I think overall it looked fairly positive. I think the underlying fundamentals still do look positive. We are forecasting some subscriber growth to continue accelerating, and it does look like they are fairly well positioned to continue delivering growth in terms of their existing infrastructure and also their operating model. So overall I think it does certainly look positive, and really was confirmed by that positive AGM today.